I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Thursday, May 27th, and the roller coaster continues in the grain complex. But before we get into that, I want to make you aware that we do post a lot of our daily content and daily research on our website, bluelinefutures.com. Research tab here, select on free, and you can read it there. And if you are not a client or a subscriber, you can sign up for a free 2-week trial of that daily commentary for quite a few different reports that we offer each and every morning. And if you're watching this on YouTube, we obviously post a lot of videos. You can find those on YouTube. So go ahead, give us a follow, give us a like, leave us a comment. We love the feedback. So without further ado, we'll get started with the Tech Talk, starting with July corn. Finishing the session, limit up. We had the bearish head and shoulders breakdown the other day. We rebounded yesterday morning. And I think a lot of this was just on the fact that the USDA did not confirm the cancellations from China that everyone was talking about here on this big down day. So we've got some renewed optimism, but we would take that optimism with a grain of salt. We are literally right back at the same prices that we were last Thursday. So we traded a headline. That headline didn't really play out, or wasn't true, I guess you could say. So now we're right back at the prices. So I do still think that the bears have a little bit of an advantage here against this technical resistance pocket that we laid out. If we get out above here, that opens the door for retest of the psychologically significant $7 handle and a potential retest of the contract highs. But until we chew through this pocket, I do think the bears have a little bit of an advantage here. So I know we've had a nice couple days, almost a 60-plus cent rally from yesterday morning's low, but temper your expectations. There's quite a bit of resistance that the bulls still need to chew through to kind of negate the bearish activity that we've seen since marking the top here in the middle of May. Now, moving over to the soybean market, as mentioned in our RFD TV interview, we think that there's a little bit more opportunity in this market. We've been talking about significant support coming in the low 1490s. We tested and held this the last two sessions, finally got a springboard reaction and rally today, and wouldn't be surprised to see that continue up in maybe a potential retest of this breakdown point, which comes in closer to 1575. That's going to be, I think, the inflection point for the market going forward. But technically, I think that we can get there. And fundamentally, I think that there's still a very good fundamental backdrop for the soybean market. So I do think that there's still value in prices at these levels to the upside. Now, over on the livestock side of things, live cattle has been pretty much a dead duck. You can see that we've been trading basically our pivot pocket for 8 consecutive sessions, and it looks like the bulls are starting to get tired and potentially throwing in the towel. If we can't get out above this pivot pocket, potential retest of the low end of the recent range could be in order, but if we get out above here, 120 is in order. But right now, just in the middle of that risk range, waiting for cash to firm up, which has been basically a stick in the mud. If we can get slaughter numbers to pick up, hopefully we can chew through some cattle, get that cash price working north again. But again, I've mentioned this in the daily reports. The June contract is going to be running against the shot clock here. So you're going to want to maybe look on an extended time frame in some of the deferred markets. Now, wrapping things up with the feeder cattle complex we joked about in this morning's report. If you get corn right, you're probably going to get feeder cattle right as well, and that certainly played out here over the last couple of sessions. Corn catching a nice bid today, being a headwind for the feeder cattle complex, but it wasn't down as much as it could have been. I think that indicates that there is some underlying strength in the feeder cattle market. Significant support here near 152. That's a 50% retracement from these highs back in the beginning of April to the recent lows. If we can hold 152, we'll continue to make lower or higher lows and hopefully take us to higher highs. If corn does run out of gas, like I said, you get corn right, you get feeders right. If corn runs out of gas and retreats, I think that probably helps support this market a little bit more, and we can make a run back at the 156, 157 area. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.